Okay, today we're going to study and go into a little deeper dive into the reaccumulation schematic. So this is the one that you're seeing here on the chart for today's example is going to be the pound dollar. There was a pretty decent move to the upside on the pound dollar, and I'm going to review exactly with this schematic how this relates to the price action that you see on the charts and how to find it. Reaccumulation is basically a pause in an uptrend. And you can see that here in this schematic. You can see that there was an uptrend. So again, basically a pause in an uptrend, and it's another range of consolidation prior to the next breakout and the next leg of an uptrend for the most part. So ownership of the stock or whatever it is, commodity, currency pair, is strengthened, meaning that the composite operator or the smart money traders, they've already made their decision and have created that campaign and participated in this campaign to the upside, and they're participating and they're strengthening that trade by accumulating or acquiring more of their position. So the difference again between accumulation and reaccumulation is that accumulation stops the downtrend. The CO or smart money begins that lengthy process of absorbing shares. And then reaccumulation, again, is the process of absorbing more shares during the uptrend. Key levels. This is one of the things we want to focus in on is the buying climax high. We can still find the same thing that happens here. So you'll notice with distribution, we're looking for buying climaxes and automatic reactions. But the same thing will happen with reaccumulation. We're going to have at some point a buying climax and an automatic reaction. And as I always say, those are key levels of support and resistance, and we want to be paying attention to those. And we immediately want to draw our resistance line and support line based on that buying climax and automatic reaction. We know that we're likely to get a test that will exceed the buying climax and very often exceed the automatic reaction low. Very often there's also a spring. So there are springs that are typically associated inside of this reaccumulation phase, and I'll show you how to find them. There was actually a spring today with the pound dollar, and I'll show you where it was located. It was right around here. So sometimes keep in mind that that spring can develop even though it doesn't necessarily take out that automatic reaction low. Tips or things that we want to be paying attention to again is the absorption process itself inside of reaccumulation or accumulation. This is where the price action is going to become less volatile. You'll see that here as these little price swings. You'll notice that there's a big difference. Again, just a moment ago I mentioned the degree in the uptrend or downtrend, the sense of urgency, the ease of movement to the downside or to the upside. These are little clues that we're looking for when we're reading the bar charts. This area where I'm moving my cursor is very, very different than what you see in these strong uptrends or downtrends and these reactions. And you'll notice how things start to diminish as far as the sense of urgency or the dramatic move to the upside or to the downside over here to the right just prior to the breakout. And that is typically caused because of the fact that the composite operator or smart money has absorbed or acquired more of the stock or the commodity or the currency pair, and it becomes less volatile. They've removed that from the market, which is absorption. And then we get that simple move to the upside. That is a sign and a clue that this is starting to diminish and it's starting to hold. We look for the spring, and then we can determine whether or not this is one of the ways that we can determine whether or not this is reaccumulation or distribution. We don't want to be on the wrong side of that. So let's take a look at the pound dollar. So here's the pound dollar, and this is the time frame and the setup. I'm going to compress this so you can see what this looks like and how we can compare this to the schematic that we were just looking at. So let's start off there. Let's go ahead and compress this, and we can see that we were in an uptrend. This goes back to the left quite a ways. Again, this is just the time frame that we zeroed in on to be able to find this and to locate the spring, which is right here. These pullbacks, these lows are a little bit higher than the previous low. Now here we had another low, and this right here creates the spring. You've got a low, the automatic reaction low. Here's your buying climax, and then you start to see these lows which are higher than the previous low, and they hold. And then here, and I'm going to discuss this right here in just a moment as we dissect this area right here that gave us the spring, this is what we're looking for. The schematic, again, you'll notice that these lows here are getting higher and higher. We've got a low here. This is our selling climax. Here's our automatic reaction. So again, we want to draw those levels. So we're getting the same pattern in other areas on smaller time frames. Remember how I showed you the schematic for reaccumulation? That would represent, let's say, a daily or a weekly or let's say a 1 hour time frame. But we can break it down and go to a 15-minute chart just like this. So here's the level that we were using, and we were waiting for this breakout right here and then waiting for a test, which is right here. This is our test. Once we get our test and we see price resume, we know that we can get into the trade going long. And then it does the same thing again on a bigger time frame when it breaks out above this resistance. So again, going back to this resistance level right here, if I tighten up the charts, there's our buying climax right here. And here's the test again. So we get another test. So there are a couple of different places that you can get into a trade like this. So again, here we had the spring on the 15-minute and pullback. This is phase C. And then the pullback again as it breaks out in phase D. There was the test. And then it does it again on a bigger time frame. So here's the breakout in phase D on a bigger time frame and a pullback and a test. Let's take a look at that. Leaving it out on a 15-minute chart, you can see the test right here is very, very obvious. So again, this was a great move. 92 pips, I believe it was the breakout and the move to the upside from the open, which was a really decent move. In my opinion, if you don't learn these skills in the lesson you just watched, you're likely to continue to get the same results. And if you aren't able to earn profits every month, then how long do you think it's going to take you to turn things around? If you're looking for a coach to help you, I invite you to take a closer look at my coaching program. It's a 9-step program that will help you earn a full-time living trading Forex in 90 days. It's the clearest path to the goal that you're trying to achieve right now. There isn't anything like it available on the internet. Click the link below to get started, and you can book a call with me to see if my coaching course is the right thing for you. There's no selling pressure and no commitments to join. Just click the link to find out more.